Okay, so when I code my strategy, I have two different entry models, but the criteria is kind of the same for all trades. Um, so I start out, I look at hourly swing highs, change fractals to 2 for both ES and NQ. Change that to 2. So you can see I marked a ton out. Um, I marked all these out. That's a high, that's a low. That one I didn't mark out because it got taken out. But like for example today, ES, you can see right here, lines up right there. Check out this hourly, which is right there. And then I look for a downside move, but it has to be within, it has to be trading underneath this hourly. So like I took out the hourly. Then what I look for is 3 candle patterns. This is also a fractal, right? So 1, 2, 3. There's a higher candle here and a higher candle here, protecting this low. This low is taken out right here. And then it left a fair value gap, left this gap. And this gap came out of this. So right when it broke this, it also left a gap. It could do that, or it could leave it before this. So this gap would be fine if this gap wasn't here. Then I look for it to trade in the gap, trade in, and then the candle has to close down out of it, and the opposite for if it's going the other way. The maximum stop loss would be 27, and I put it one tick above the last candle. So like if I used this gap, right, for example, this one, I would put my stop loss above, well, one handle above, so that closed at 77.75. I'd put it at 87.7 or 78.75. So it's the third candle. It's the first candle. 1, 2, 3. The second being the fair value gap, and the first being the candle that it's left above. So like for this, that's it's technically 1, 2, 3, but then you start over because it's 1, 2, 3 because there are two gaps. So I kind of use this as one. So I put it above this candle because this is lower. 27. It has to close below. Actually, it's to close. So tap into it and close below. So it's reacting off this gap. And then for this, I can either, if this was in the 27 or less stop loss while it being above, then I would just market order here, but it wasn't, so I had to put a limit order here. And then I moved my stop loss to break even at 14, so 14 points would be break even. So actually this would have been a break even trade. So this would have gone back and hit me break even, but my take profit's at 20. Yeah, and then if this closes and it goes 14 points without giving me an entry, I don't enter. I look for the next one. So for hourly, like it took out this hourly on ES, so I'll start looking for this exact candle pattern. Once I see it, and I'll give it an hour after it swept the hourly. So it is an hour to do this from the time it swept. So it swept at 9:50. It has until 10:50. Once I take one trade after it's swept, like say this, I take this trade. I don't look for any more trades that look similar until I get a sweep of another area. So another sweep of another area could be 5 minutes too. But I treat hourly stronger than 5 minutes. So I kind of look for the same thing. I use, let's see, fractal 3, fractal of 3. So like for this, I also look, so the 5 minutes, it's all these swing points. So it's like 1, 2, 1, 2. That's swing. So you see the low. So I kind of treat it the same thing as the hourly. So like if this swing, or let's go this swing, was something came up, took it out again, I then look for this candle pattern again on the 5 minute. Like, or not on the 5 minute, after this 5 minute swept instead of the hourly. So the hourly I treated the same as the 5 minute. 5 minute same as the hourly. Except the hourly I give it an hour. The 5 minute I also give it an hour, but say the hourly, like it swept ES up here on this level, and then it takes out like here, and I haven't had a trade like this, I still give it an hour. But if it does sweep this and goes the other way, I'll still take that too the other way. So like, but the 5 minute has to be formed after 9:30. So like this was formed at 9, 9:05, 9:10. The start of it has to be at 9:30. So for example, like if this was at 9:30, this took it out right here, I'd look for, like I would take this, right? It took out, made a high, low, high, and then it low. So that's a fractal. And then it tapped in the gap and closed above right there. So I would take this. And then I'd put a stop. I could actually market order this because I'd put a stop at 17.25, right? And see what happens. Goes to 14 points. Move to break even. If the stop is less than 18 points, I'll take my profit at 15 instead of 20. If it's less than 12 points, like say the stop was, or 12 and a half points, say the stop was like here, then I'd take my profit at 10 points. But like if that was swept 9:30, right here, and this closed above within this range, so act like this is kind of like a range, it closed above that. If that closed above like this, that candle, then I would take it. If it closed like down here, I wouldn't take it because it didn't actually close back within this range. And then I'd give it an hour to basically do that. And then if that trade went break even, I wait for another sweep or another area, like maybe this one or this one. Like I look for it in the other direction, or if it keeps going, it takes out like an hourly or another 5 minute swing like that or that. Then I look for that direction. So like here's another example. So this takes out this, right? Or actually, this is easier because it's NQ. You have a swing low. It's taken out right here. So we can go right here. Got taken out right here, and it closed back above. So then I would take, like here's a swing low. 6. So I want the fair value gap to at least be 2 handles. So it's high, it's 86.75. It needs to be 88.75 or more, which it is, right? Look at that. This is not considered a tap in because it's low of 90, low of 90. It needs to actually tap in. So this candle tapped in. So I'd then take that close because it closed within. It's within an hour. It's like 10 minutes later. And move stop 32.75. So I'd limit order. I'd get filled right there. And then break even at 14. So that's right there. But it went, I would put it at 20. Didn't hit 20, hit break even. So that'd be a break even trade. That's another example. So that's one model, one entry. The other entry model is a little different. The model's the same. So I look for the same thing. So another thing I look for is inverse of the fair value gap, which is, say this is taken out. Okay, let's go. Okay, this one's perfect. Wait, is it? No, it's not. Let's say this gap is 5 handles big. This needs to be at least 5 handles big. I need to have a candle closure above the gap, so this closed above the gap, and I would just mark it right there. I'd put my stop at a point below the start of this candle, which actually the stop's too big because the minimum stop I do for these are 25. So say the stop was actually 25, right? And then I look for 20 points. But this made us, that's the high, right? That's the swing high right there. You can see it. I'd move my stop to break even at the first swing high. Stop to break even right here. This would actually be a loss. Zooming it on 25 points. Oh, it's actually no, it hasn't finished, but yes, that's another thing. I can show you a couple of more examples. So like, let's go. Here's one here. This was a fair value gap. So this is the gap, right? Stop loss is, looks like 23 points. Look for 20 points. Didn't quite hit that high. Yeah, and this took out, let's see what it took out. Oh, okay, so this took out this 5 minute, right? This swing. Closed back in, didn't hit this yet, so it didn't, once it hits the next swing high on the other side, it invalidates it. If it does that before it gives me a trade, then I start looking at the other direction. If it sweeps and closes below like this range. But this, I looked for, I guess, 20 points. The other thing too is, so this closed, it made a swing high, made a new one before hitting this swing high. I would then move my stop to break even if it hits this swing high. And same thing for here. Actually, this should have been a break-in trade, but it made a swing high, hit it, stop moves to break even. I get tapped out here. So it made a new swing high. Because it made a new swing high, stop gets moved to break even. Let's see another example. This is, try to find an FEG example. Okay, here's an example of a fair value gap. Gap is here, right? Took out right there. Stop is 25 points. Look for 20 points. Candle closure, tapped in, candle closed. If it only tapped into this one and it had 25 points, or 27 point stop loss, it would work because it took out this. So it doesn't need to tap into that. But it needs to have this shift of structure to be valid fair value gap. And then for IFVGs, the other ones, if it's like say, see there are 1, 2, 3 gaps here. The last one would have to be at least 5 points, and I combine them all. But when I combine them all, I go then to the 2 minute, right? So then I go to the 2 minute. Is that the same? Yeah. So I go to the 2 minute. I go, okay, is it singular on the 2 minute? Yes, it is. So then I'd rather use the 2 minute, and I wait for the 2 minute close. So instead of taking this fair value gap, I take this one because it's singular. And then I put a stop below here or 25 points. If this gap is more than 40 points big, I will not take it. So what happens if there are two 2 minutes like stacked together like this, but there are also 3 1 minutes? I'd wait for the second 2 minute to close. So I'd combine them as one, The last one that it has though on either the minute or the 2 minute has to be 5 points or 5 handles or greater. It cannot be less. Even if the say this one was like 10 points and this one was like 4, I wouldn't take it. The last one has to be 5 points, and then I combine them always. So if it's like this on the 1 minute, I look for the 2 minutes to see if it's singular. If this has 3 gaps, but the 2 minute has 2, I still take the 2 minute. The higher time frame is better. And then I move my stop to at 14 points or the internal high, whether it's on the 2 minute, it depends on the time frame. If I take it on the 2 minute, that's the internal high on the 2 minute or internal low. If it's on the 1 minute, it's the internal high or internal low on the 1 minute. So again, I just take sweeps of 5 minute, swing highs and swing lows, and then sweeps of hourly, swing highs and swing lows. The hourlies I give a little more weight to. So like if this hourly is taken out and it's swept to this in the 5 minute, and it's still within the hour, I could still take a down move, fair value gap or inverse. But if it gives the other way and gives an entry there, I'll take that. Just kind of whichever shows up first. But I give an hour within sweep. I want a 5 minute sweep or an hourly sweep, and then the 5 minute, like this wouldn't count actually because it didn't start at 9:30. So that pattern and price would need to be made at 9:30 or after. With this candle, like this would be the first candle starting this pattern, would have to be at 9:30 or after.